And looks like we are in for a stable day of trade. Stable day of trade because the global handover, some would say, is decent. Indian markets are not exactly getting perturbed or bothered by what the global trend is. The handover is not exciting, but the handover is not scary. The macro tailwind, CPI, GST, IIP, all that seems to be working for us. And on the global Trump tariff template, if I have something on that, well, nothing new, both in terms of give and take will continue. So we are in for, looks like, a decent day of trade. Will Indian markets continue to build on the good work, what we've seen? Hopefully, the global cues, local setup in terms of where markets are, the comeback in the bank Nifty, all that will ensure that if not a great, we could be in for a decent day of trade. All right, what happened yesterday? Let's look at it. Give me the intraday graph, please. The Nifty intraday graph. And frankly, I'm more constructive because you are going against the global trend. You are falling and then you are making higher highs. The decline from the intraday high, but the recovery from the intraday low, for me, that's really been a decent hallmark feature. If I just look at the Nifty setup, and of course we'll have a descriptive analysis with Kunal on that, it is chugging along. Chugging along means that nothing bad, nothing good. Nothing bad, why? Because the FNO short covering has started slowly. Nothing great, why? Because after such a large fall, you've not seen any large pockets of momentum. So I think that's the Nifty trade setup according to me. Nothing large, nothing great. You're chugging along, but when global cues are not with you, you're chugging along. That really matters. And that, I think, would be the most important part for me. But the real trade for me is, I think, in the... Can you guess what the real trade is? Well, the real trade is IT is down, banks are outperforming. The so-called sectoral rotation which troubled banks for 2024, that, banks were supposed to come back and IT was supposed to go down, ulta ho gaya tha, I think that is now reversing, which is, I think, the most important feature for me. And let's look at the banking index and the IT index, how some of the IT stocks have started underperforming and how the bank Nifty is now gradually showing signs of strength. So the IT versus bank, or money moving out from IT to banks, we'll get into why, but that is trend number one. Trend number two is the macro tailwind. CPI is down, IIP is up. Now within inflation, there are two components. One is core, and then second is one is wholesale, which tells you the pricing power, which is you look at core, and then you look at food, vegetable, that is seasonality. So you want the seasonal inflation to go down, but you want marginal inflation or core inflation to pick up marginally because of the lower base. So I like the number, and even the IP data, even though it's a lag data, I think it's quite impressive. Third is FIs. They're selling, but the selling is not intense. But more than FI Shishti, I would say it's the SIP data. Don't go by ye 3 mahine ka low hai. Markets are at a lot of stocks which are at a multi-year low. The SIP flow may be at a 3-month low. But when SIP flows are at a 3-month low, you have to put in context that the market conditions were very sluggish. So the month of Feb really tested the temperament of this market, both in the large cap, mid cap and small cap. And yet if the SIP flows, and at a time when several 1-year SIPs or 2-year SIPs would have become flat with negative returns, the fact that the Indian long-term investor did not decide to really cancel their SIPs, and it's a marginal drop. See, 26,400 becoming 26, it's a 400 crore drop. So optically I can make a case that 26,500 has become 26. I agree. But look at the market. And markets have fallen so much, and if SIPs have not got cancelled, when the deal temperate and your entire long-term portfolio and whatever you've invested in 3 years, suddenly double-digit returns become single-digit, the SIP investor did not go away. That is bravo. I would say bravo to Indian investor, the kind of maturity they are exhibiting, and they've understood that the true power of SIP is not quarter se quarter tak, it is century se century tak. When you start a SIP, you don't do QSQT. QSQT is quarter se quarter tak. You actually do decade se decade tak. DT, decade से decade तक. And that is what I think the SIP data is exhibiting. So FI selling reducing, SIP data looking strong, the best of the, worst of the time has been tested. I think on the liquidity front, this market is not looking bad. That's my limited.
If you like this video, then like, share and subscribe to ET Now.